Assalamualaikum and welcome everyone. My name is Nurulani Kornia binti Mansur and today I am honored to present our research on the impact of financial performance toward share price movement of the Malaysian banking sector from 2013 to 2023. These studies aim to investigate the relationship between key financial performance indicators and the fluctuation in share price within the Malaysian banking sector. The findings of this research provide valuable insight for investor, financial analysis, and policymaker. Let's dive in deeper into the important topics. The Malaysian banking industry serves as a fundamental pillar of the nation's economy, facilitating economic growth through financial intermediation. The industry's stability and profitability directly impact the country's GDP and overall financial health. Share price movements, in turn, act as a critical reflection of banks' financial health, profitability, and the level of confidence investors place in the institution. This research aims to bridge the gap by analyzing how financial indicators such as earnings per share (EPS), return on equity (ROE), net interest margin (NIM), and non-performing loans (NPL) contribute to share price fluctuation. By understanding this relationship, we can develop better investment strategy and policy frameworks. Now, here are the four key research objectives that guide our study throughout our analysis. The first one is to analyze the effect of EPS and ROE on share price movement, as these are critical measures of bank profitability and investor returns. Second, to examine the influence of NIM and NPL ratios on share price stability, providing insight into financial risk and credit performance. Third, to assess the impact of external macroeconomic factors, including inflation and interest rates on the movement of banking share price. Lastly, to provide an actionable insight for investor and policymakers to enhance investment decision making and financial policy development, ensuring greater market stability. Next, our study then focused on four fundamental financial performance indicators that are widely recognized in the banking sector. The first one is earning per share or EPS. This represents a bank's profitability per share of stock. A higher EPS suggests strong earnings performance, making the bank's stock more attractive to investors. Second is return on equity or ROE. This measures how efficiently a bank utilizes its shareholders' equity to generate profit. A high ROE indicates strong management and operational efficiency. Next is net interest margin (NIM), a crucial indicator of bank's ability to manage its interest income against interest expenses. A higher NIM signifies a better financial intermediation and profitability. And lastly, non-performing loans (NPL). The proportion of a bank's total loan portfolio that is classified as a non-performing or default. A high NPL ratio signals greater credit risk, potentially leading to reduced investor confidence and declining share price. To conduct a comprehensive analysis, our research focused on 6 major Malaysian banks: Maybank, CIMB, RHB, Holiong, BIMB, and Public Bank. Our data set spanned from 2013 to 2023, capturing significant financial trends and market movements. We employ panel data analysis (PDA) using Stata software to analyze financial performance and its impact on share price movement. We have two key variables. The first one is dependent variable, which is the share price. The second one is independent variables, which is EPS, ROE, NIM, and lastly NPL. Our statistical analysis, we use the Hausman test is to use to determine whether a fixed effect or random effect model is more appropriate for our data. Now on to our hypothesis. In our studies, we build upon the following hypothesis. The first one is EPS has a significant positive impact on the share price movement, meaning that the banks with higher profitability per share tend to experience a rising stock price. Second, the ROE positively influence share price movement, as banks that generate strong returns on shareholders' investment are likely to be valued higher in the market. The third one is NIM has a significant effect on share price stability, as it measures the bank's ability to generate income from its lending activities. Now, the fourth hypothesis is NPL negatively impacts share price movement, as the NPL has a higher level indicator indicate increased financial risk and potential instability. And lastly, the H0 is there is no significant relationship between financial performance indicator and share price movement, meaning all the financial performance indicator does not affect any share price movement. Let us start with the scope of our study. Our research focuses on Malaysian banks that are listed on Bursa Malaysia. By concentrating on these publicly traded banks, we can access comprehensive financial data, allowing us to analyze their performance and share price movements effectively. Then we have gathered financial data covering a decade from 2013 to 2023. This 10-year period provides us with a broad data set to observe long-term trends and patterns in the financial performance of these banks. Our analysis then examined the several key financial indicators including EPS, ROE, NIM, and finally NPL. With this indicator, it helps us understand how different aspects of financial performance impact the share price movements. Now on to the limitation, which let us discuss for our study. Our study relies on secondary data obtained from the financial reports of these banks. While this data is crucial for our analysis, it is important to note that it may be subject to reporting biases and inaccuracy. As a result, our findings should be interpreted with caution. Our analysis does not account for qualitative factors such as investor sentiment or regulatory change. This factor can significantly influence share price and may lead to incomplete conclusion if not considered. For instance, a sudden change in regulations or a shift in the investor sentiment could impact the share price, independent of the financial indicator we have analyzed. Now, our study focused on 6 major banks, like I said earlier, which is Maybank, CIMB, RHB, Holiong, BIMB, and Public Bank. While these banks are significantly players in the Malaysian banking sector, they may not fully represent the entire industry. Consequently, our findings may not be generalizable to all Malaysian banks. Now, let us delve into the key findings of our research on Malaysian banks. In our research, it highlights several important financial relationships. Firstly, we found out that EPS has a most significant positive impact on share price, with coefficient of 2.19 indicating that investors prioritize strong earnings performance when making investment decisions. In simple terms, the higher the EPS, the more attractive the bank's shares become to the investors. Secondly, ROE has a minor negative impact on share price with coefficient of negative 0.71. While ROE is a measure of financial efficiency, our findings suggest it is not the primary drive of share prices. Investor might look at ROE, but it doesn't play a significant role as EPS in influencing their decision. Next, we observe that NIM has a strong negative impact on share price with coefficients of negative 18.32, implying that the bank with higher interest margin does not necessarily see an increase in share prices. In fact, a very high NIM might indicate excessive risk-taking or dependence on interest income, which investors might view it negatively. Lastly, our findings show that NPL have a small positive impact on share price with a coefficient of 6.06. This is quite surprising as it is in contradict that traditional belief that the high NPL ratio always negatively impacts the share price. It suggests that investors might be considering other factors or that the bank with higher NPLs might still have other strengths. In summary, our findings reveal EPS is the most crucial factor influencing the share prices, while ROE and NIM have less clear-cut effects. Interestingly, NPLs have a positive impact challenging conventional wisdom. This insight can help investors, banks, and policymakers make more informed decisions. Now we will look into implication and recommendation. First, on the implication. Firstly, for our investor, our findings suggest that investors should focus on EPS when selecting bank stocks. EPS has the biggest impact on share price. Essentially, the higher the EPS, the more profitable to the bank, making it a valuable indicator for the investor investment decision. Now, as for the banks, the recommendation is to improve profitability by increasing EPS. By boosting their EPS, they can attract more investors and increase the bank's stock values. This can be achieved by enhancing operational efficiency and cutting unnecessary costs. Lastly, for the policymaker, it is crucial for strengthening the financial reporting. Accurate and transparent financial reports help investors make informed decisions. By improving the reporting standard, the policymaker can build investor confidence and promote a healthier financial market. On to the recommendation. First, banks should focus on boosting their EPS by increasing efficiency and reducing unnecessary costs. By streamlining operations and cut down on waste, banks can improve their profitability, making their stocks more attractive for the investor. Next, investors should prioritize companies with stable EPS growth for better returns. A stable and growing EPS is a strong indicator of a bank's financial health and long-term profitability, which can lead to a more secure investment. Lastly, policymakers should work on improving transparency to provide investors with a clear financial insight. Enhancing financial reporting and disclosure standards will help investors make informed decision, boosting confidence in the financial markets. To summarize all our analysis research, financial performance plays a significant role. with EPS merging as the most important factor. Higher EPS leads to higher share price, making it a key indicator for investor. ROE has some influence, but it's not a major driver. While it reflects its probability, its impact on share price is limited. Meanwhile, NIM and NPL show minimal impact on the share price, suggesting that investors focus on the other financial indicators. In conclusion, beyond financial performance, macroeconomic conditions and strong risk management are essential for long-term financial stability. Banks that manage risks effectively and adapt to economy changes are more likely to maintain investor confidence and sustain share price growth. In in summary, EPS is the most significant factor, followed by ROE. Meanwhile, NIM and NPL have a little influence. However, strong risk management and awareness of economy conditions remains crucial for overall financial health.